Every currency in history has claimed to be unbreakable, and every single one has eventually shattered. We are about to uncover what remains standing after they fall. Governments and empires always promise permanence. They assure us the system is solid, the money is secure. Yet the pages of history tell a different, far more brutal story. From the Roman denarius to the Venezuelan bolivar, populations have watched their life's work evaporate into nothing. The true danger isn't the collapse itself. It's the illusion of safety we cling to. Your bank balance isn't bedrock. It's a fragile agreement, and that agreement can be broken by dawn. So what patterns emerge from the rubble of fallen economies? Consider the Byzantine Empire's gold solidus. For 700 years, this coin was the ultimate symbol of stability, trusted from Europe to Asia. Its purity was its power. But then, the emperors began to quietly dilute the gold, mixing in cheaper metals to stretch their supply. The public's confidence was the first thing to be debased. The solidus, once the backbone of Mediterranean trade, became a token of distrust. The empire's financial strength crumbled with it. Real value flees to what cannot be counterfeited. Those who survived weren't the loyal citizens. They were the skeptics who had quietly moved their wealth into tangible assets: land, genuine gold, anything outside the state's direct control. This is the first, and oldest, rule of economic survival. But collapse doesn't only come from within. Sometimes it arrives from the outside with terrifying speed. The Black Death in the 14th century wiped out nearly half of Europe. It was a human catastrophe of unimaginable scale. Yet, it triggered a profound economic reversal. With a severe shortage of labor, the surviving workers found their skills in desperate demand. They could command higher wages. Land and property, now abundant relative to the population, became cheap. Those with even small amounts of saved capital could acquire estates that were previously far beyond their reach. Does this dynamic sound familiar? During the recent global pandemic, we witnessed a modern echo. Supply chains fractured, governments unleashed trillions in printed currency to stave off disaster, and a great divide emerged. Those with liquid assets bought depressed stocks and real estate, seeing their wealth multiply. Those living paycheck to paycheck fell further behind. Crises reward the prepared and punish the exposed. This is the uncomfortable truth. Pandemics redistribute wealth. They always have. But what happens when the very institutions designed to protect your wealth are the ones that fail? In the 1340s, Florence was the financial heart of Europe. Its banking families, like the Bardi and Peruzzi, were considered invincible. They had lent colossal sums to King Edward III of England to fund his wars. When he defaulted, the banks imploded. Depositors lost everything. The city was plunged into chaos. The people who had trusted these too-big-to-fail institutions learned a harsh lesson. Size offers no guarantee. This pattern has repeated for centuries, from Florence to the 2008 financial crisis. The American Civil War provides another stark lesson, not just in battle, but in finance. Both the Union and Confederacy printed massive amounts of paper money to fund the conflict. The North issued greenbacks, while the South flooded the economy with graybacks. The result: hyperinflation. In the South, prices skyrocketed thousands of %. A soldier's monthly pay could barely buy a loaf of bread. Lifelong savings were erased. The only things that held their value were tangible goods: food, tools, land, and gold. Your own nation has already experienced a currency collapse. The protection was not in paper, but in what the system could not devalue. Then there is the speed of revolutionary collapse. During the French Revolution, the new government issued the assignat, a currency backed by seized church lands. They printed it with reckless abandon. The value plummeted. Farmers refused to accept the paper notes for food, demanding silver or goods instead. The paper promises of a noble cause became utterly worthless. The winners, once again, were those who held essential, real-world assets. But surely, in our modern globalized world, this is an ancient problem. The 1997 Asian financial crisis proves otherwise. It began when Thailand's currency peg broke. Nations that had borrowed heavily in US dollars were suddenly crippled by debt. Currencies across Southeast Asia collapsed. The people who suffered most were ordinary citizens who saw their savings evaporate and their jobs disappear. Those who held assets in stable foreign currencies or outside the system fared far better. The lesson was clear. Debt in a foreign currency is a trap, and it is happening right now. In recent years, the people of Lebanon lived this nightmare. Banks simply froze accounts. The Lebanese pound lost over 90% of its value. People who had spent a lifetime saving found their deposits were now pocket change. Doctors, engineers, and retirees were financially wiped out in an instant. Your bank account is a loan, not a vault. The survivors were those who had diversified internationally or held real assets. Everyone else was trapped. If you think it can't happen where you live, remember the US regional bank collapses of 2023. Confidence can vanish in a single day. So, what is the ultimate defense? History offers a mosaic of answers, not a single one. In Byzantium, it was gold. After the Black Death, it was liquid capital to buy cheap land. In Florence, it was distrust of massive banks. In the Confederacy, it was hard goods. In modern Lebanon, it was getting your money out of the system before the doors closed. The common thread is resilience. It's the combination of holding real assets and possessing real skills. When money becomes meaningless, the ability to produce, to build, to fix, and to trade becomes the ultimate currency. The baker who can feed a street, the mechanic who can repair a generator, these individuals don't just survive hard times, they thrive in them. This leads to the great paradox of collapse. For the unprepared, it is absolute ruin. For the resilient, it is a moment of historic opportunity. It is a transfer of wealth from those who trusted the system to those who understood its fragility. After 2008, those with cash bought homes for pennies on the dollar, while others faced foreclosure. The question is not if a system will falter. The question is whether you will be holding empty promises or something of genuine, lasting value. If this perspective resonated with you, please support this channel. Give this video a like and subscribe to Winds of Thought to continue this essential exploration. History doesn't repeat, but its lessons are always waiting.